Hey everyone, welcome to Talking Tokens, a podcast focused on interviewing the best crypto founders, market players, and up-and-coming startups that are changing the industry every single Tuesday and Thursday. I'm Jacquelyn Melinek, your award-nominated host and former senior crypto reporter turned entrepreneur, and I'm excited to be here with you all. Now, let's get into it. Today's guest is Antoni Zolciak, the co-founder of Aleph Zero, a layer one blockchain with a focus on modular ZK privacy. I actually covered Aleph Zero's $14.8 million funding round back in 2021, but the market has changed a lot since then, and we're all in different positions. So I'm excited to catch up and hear how things have been. Antoni, welcome to the show.
Thank you for having me, and thanks everyone who's listening.
Yeah. To start off, can you kind of tell us a little bit about yourself, how you got into crypto, and why you decided to create this blockchain?
Yeah, sure. So, I'm the only non-technical co-founder of Aleph Zero, I would say. And my job was from day one to ensure that we have proper branding, marketing, also products on the front end. So kind of we start with a user and then reverse engineer it back to the deep tech. How I started with crypto was I was in technology for like most of my life, since like late teens, and exactly on this, I would say, intersection between how do you bring like some core technology to the market, and then how do you essentially package it in a way that is understandable to people, and just brings them the most value. Like my first interaction with the crypto as an asset class, I guess, was back in 2015 or so, and then I got seriously involved around 2 years later. I was working at a technology company back then, and we had like 2-3 different projects in the space. Aleph itself started when I was at my co-founder's birthday. And he had just told me about like a new consensus protocol that he's working on. Garage style startup, I would say.
I love that. And for our listeners, can you kind of explain what A0 is doing in layman terms? Obviously, you mentioned you're a non-technical founder, so that's perfect for our audience. How do you kind of differ from other blockchains, and what are you guys trying to solve here?
Two main things, I would say. The first one is performance, and the second is privacy. So essentially, what we set out to build was that, as the industry matures, as we have more developers and more users, they will want something that they don't feel underneath. So we're big believers in this thesis that the users of tomorrow are not going to care what chain they're using, what sort of underlying distributed database is there. They just want their app to be as smooth as possible and as optimal from a UX standpoint as possible. And then going back to this, reverse engineering bit, how do we get there? Well, first you need something that's really fast from the finality standpoint. Second, you need something that can scale. Third, something that is secure so that the users are not at risk. And then fourth, which we think is the USP that we have, is you wanted to enable on-chain privacy and not just pseudonymity, as in the case of, say, Bitcoin, for instance, or ETH, or any other conventional solutions. So TLDR, I would say that we have two major areas of focus, and we're solving the on-chain performance, and we're solving the ability to have private or privacy-enhanced transactions or computations.
When it comes to privacy, what do you mean by it being private? Because obviously everything that transacts on the blockchain is usually distributed on like a public ledger or on-chain data. So how does that kind of differ?
Yeah. So to say an average user, it might seem that Bitcoin is private in the sense that, the sort of the hash or your wallet is not necessarily associated with yourself. But then again, there are tools like Nansen, for instance, or different analytics companies that can easily sort of map out your on-chain activity and then build essentially a customer profile and use that data for whatever reason. So what we have at the moment is not really privacy, but more of a pseudonymity. And then what we mean by privacy itself is that for instance, one of the products that is very centric to Aleph Zero is called the Shielder. And in the most practical terms possible, if you want to, say, anonymize your on-chain movements now, you would send the funds to, for instance, a centralized exchange and then withdraw them on a different wallet. What you will be able to do on Aleph Zero very soon and different Aleph Zero front-end wallets is you can just click a button that says Shield, then you have a something called the zero knowledge proof generator locally, and now your funds are shielded from the outside world. So for instance, like if you use MetaMask now and you want to repay your friend for pizza or whatever it is, what is going to happen is that they're going to click on the transaction and they're going to be able to peek into your wallet. If it's a good friend, you don't care. If it's a somebody you don't really know, you're at risk essentially. Okay,
and then by using the shield, that would then kind of protect me as the user
Correct.
From anyone seeing.
Okay. Correct. That would obfuscate on-chain movement and traceability.
Interesting. Yeah. I guess what is the negatives to the idea of privacy, right? Because obviously there's a lot of pros for people who want to keep these things a little more secretive, but how do you see it on the flip side?
Yeah. I would say the first thing is that this is powered by client-side ZK. So we talk a lot about ZK in the space, but primarily it's associated with server-side scaling. So in most cases, when you hear that something uses ZK, it's about scaling Ethereum. Then in our case, it's essentially a tech that is being utilized locally, and what it means is that it's on your laptop, on your mobile, and whatever it might be. So it's still slow because the hardware still has some way to go before it can generate the proofs faster. Now, what is the overall downside? It's the narrative around privacy, I would say. So that's one of the challenges that we see in the space, because it's very much associated with various forms of activism, which is 100%, the right way to do, because privacy is a fundamental human right. But then again, the masses are not gonna choose something that is privacy focused just because it has privacy. It has to have some benefits as well. Right. Then with, just as an example, with, projects like Tornado Cash, we saw the regulatory misunderstanding around on-chain privacy, which is also definitely challenging. So we do have a solution for that, that we also are going to introduce to the market pretty soon. But yeah, to sum up, I would say that we're looking at a challenge of user experience whenever you use client-side ZK, which results in on-chain privacy, as well as painting the narrative of how does privacy translates to your experience to benefit. How does it benefit your experience as a user?
Mm-hmm. In the crypto industry in general, how has the opinion of privacy or the need for it kind of changed since we last spoke in 2021 to now?
I remember back then that the most popular discussion around privacy was, is it a product or is it a feature? So that was the sort of underlying notion. Now, I think that especially in terms of available funding for different privacy-focused projects, and especially in the areas of like privacy-enhanced RWA ownership, or if we're talking about the possibility of tokenizing real estate in the future and using again like privacy-enhanced ledgers there, or even private DeFi, this discussion has changed significantly. So we do see a lot of more interest in privacy as a sort of a super narrative that makes all the other narratives a bit better. Because whatever you do, if it's private, it's usually better. Also, private does not mean non-transparent, because then you can, via zero knowledge proofs, you can simply prove that a statement is correct without disclosing the contents of that statement.
Right.
Yeah.
So I guess looking at A0 as a whole, who is the ideal user and ecosystem base here? Like, what do you look for when it comes to developers and users on chain, and vice versa? Like, what are the most common users you're getting? Do you kind of know?
Yeah. So first, I would say that we would have to establish what a user is, because with L1s or L2s or general blockchain infrastructure without a proof of personhood, it's very hard to even gauge how many users you have and who the users are. So how we look at it is that the users of the infrastructure are developers first and foremost. Then you have the overall holder base that are participating in on-chain governance, and are a part of the ecosystem. And then you have the users of the apps, so that are also by extension our users as developers of the core infrastructure. So that's pretty much how I would sort of define different targets in the user base. And now, as far as the benefits or who is this for, I would say that from the B2C standpoint, or we do have sort of the retail users benefit from the apps. They do not really, from the entire infrastructure, it can be something that they speculate on, but really it's not something they would use on a daily basis. But then the infrastructure enables the apps to offer them this value proposition in the like of, say, privacy enhanced DeFi, where orders are revealed only upon execution. So you don't have to deal with spoofing of the order book, or you don't have to suffer from MEV, for instance. Then on the B2B side of things, one of our ideas back in like 2017, 2018 was that eventually enterprises are going to stop using permissioned environments, so permission chains, because for whatever it's worth, they are more akin to conventional databases rather than public chains like ETH. But then if they will use public networks, they will need to have some privacy for their sensitive data. So this is another group that we are trying to offer value to, and we're working with Deutsche Telekom or Saudi Telecom to create some novel use cases. Like one of the ideas is, for instance, also on the app level, an institutional multi-sig wallet that has this shielding capability and has different corporate flows just built in for approvals. It's a relatively simple use case, I would say, but it's something that is doable only when you have that on-chain privacy component.
Yeah, for enterprise companies, especially in Web 2, do you think they need to have that on-chain privacy component, or is it like a feature that many want?
I would say that this depends on the use case. If there's data that you need to protect, yes, you either not put it on chain, or you need to kind of keep it private. Then one of the challenges is also the data controlling issue, right? So this is also one of the major reasons why we saw the adoption of permissioned environments, because then you can specify on which node you kind of host the information, which in Europe, with GDPR is it's just a big deal. You have to be able to sort of pinpoint exactly where the data is. Mm-hmm. And with privacy, it's just easier.
Yeah. Looking at privacy as a whole, I feel like we've been talking about it a lot, and it's super important. How do you think it kind of opens the door to better user experiences in crypto compared to what exists today?
Sure. So in this case, I would say that, like, if you have, let's take DeFi as an example, or indexes. If we use indexes, the entire trade history is visible. If you're let's say a hedge fund, your positions are also visible if somebody figures out which addresses belong to you as a fund. And then with this privacy component, you can essentially shield your entire trading strategy, and not worry about copy traders, not worry about somebody front running you. So this is overall useful for institutions in the space. Then for users, it simply boosts the overall usability of really just any app, because you can simply have one wallet. Obviously, there's an aspect of the security risk, and you might want to just use multiple wallets to kind of distribute your holdings, but you theoretically can use a single wallet for everything that you do and not worry about, again, having your data scraped and analyzed somehow. Then just as an example with, for instance, collectibles, this is something that we're also looking to. So let's say you have NFTs that represent your right to a certain collectible, that you might want to keep the fact that you are the owner of that collectible private, because, for instance, it's like some super rare baseball card.
Right. And I feel like you'd probably be more prone to hacks if people could see what you own and do, for sure.
Also that it's easier to target you, for sure.
Yeah. Looking at other ecosystems outside of A0, what are they doing that you think they could do a better job of prioritizing these features and factors, even though it might not be like their whole vision?
With other ecosystems, I would say that we saw a lot of movement for. We saw a lot of interest in external ecosystems or like maybe a need for privacy. So, for instance, one of the use cases that we have that is a multi-chain use case, it's called IDOS, so an identity operating system. And what they're looking to solve is, how do you make verified credentials interoperable? It's something really interesting, because essentially the bet is that eventually more and more on-chain activity is going to need to be KYC'd. And then how do you make it convenient for users? So how do you not make a user go through a different KYC process every time, but just do it once, or have them do it once and then use those same credentials across different ecosystems, different apps, and so on. Here, as just as an example, our zero knowledge tech is going to be able to provide like a universal layer of privacy for your credentials, so that instead of revealing like your entire data set to a host of different parties, you could just reveal whether a certain statement is correct or not. So as an example, like if it's an 18 plus use case, you can prove that you're over 18 without revealing your actual age. If it's related to, as an example, AML, you can simply prove that you're not on sanctions lists instead of providing your entire data set, because you might not necessarily want to. If it's, a loan application, for instance, you can prove that you have the necessary credit score without revealing your entire history.
Right. And is this something that people could pick and choose right now?
Do you mean like what to reveal and what to not reveal?
Yeah.
So right now, not yet, because this is still being built out. The launch is scheduled, I think, for the next quarter. But this could be something that is really interesting and stands in opposition to salvaging the data, and at the same time being able to sort of satisfy different compliance requirements that we have in the space, and that we will certainly have to deal with more of them in the future as well.
Right. What kind of other areas on that note do you kind of see evolving into more mature markets, maybe through ZK technology and privacy? Is it NFTs, real world assets, Web 2 getting into Web 3, like what we talked about before? What's like the bigger business case here?
Yeah. I mean, we generally often laugh that ZK itself could end up being bigger than crypto. Because it's sort of it's very powerful to be able to prove that a statement is correct without really disclosing the contents of whatever it is that you're proving. And with NFTs, just as we're working with one of the marketplaces on private minting, on private transfers of those NFTs, and figuring out how we can turn this into essentially a privacy NFT standard and what use cases can be applied there. And stuff like we've seen companies experimenting with authenticity certificates, like for instance, in the watch market. So how do you prove that your, as an example, watch is coming from a legitimate source with the help of NFTs? With real world assets, this is also quite interesting, because eventually we're gonna have probably the real estate tokenized on chain. I don't think it's gonna happen in like the most immediate future, but this is also something where you might want to keep your data private, but still prove that you own the real estate. So yeah, I mean, there's a bunch of those use cases, and where we stand is we're sort of, one of our legs is in the corporate and enterprise world, and the other is in DeFi and the broader crypto space, more crypto native space, let's say.
Between the two sectors, which one do you think will be the ultimate adopter of this technology?
I mean, we're definitely strong believers in both, to be honest. Like for enterprises, it's just a more efficient way of organizing things if it's implemented properly. And for on-chain finance, like we already see that this is so much better than the legacy systems that it's just a matter of time before, the entire world uses the new rails. So, I mean, just even when it comes to identity, we have WorldCoin, we have Humanity Protocol, and several others that this entire sort of vertical is becoming even more interesting than like 1 or 2 years back. And this is the industry's answer to the upcoming compliance revolutions that are headed our way. So if I were to kind of like summarize it, I don't think there's going to be much of a difference in the next 3, 4, maybe 5 years between the enterprise use cases and like crypto native use cases, because it's all going to be powered by some version of the same tech.
Okay, got it. So on that note, what are some real life blockchain use cases with privacy that you see kind of gaining greater adoption, maybe in the near term, like the coming months, on both sides of the industry or both sides of those sectors, and then across like mainstream audiences?
Yeah, there's not a lot of them yet. Like where this comes from is that what we see sort of from a high level is that there's a lot of pilots. There's a lot of will to switch from those permissioned implementations to public environments, but this is still super, super early. But then whenever we talk to different enterprises and we sort of embark on the POC journeys, the interest is definitely there, in the sense that there's a willingness to experiment. And yeah, I would say that the first use case that is going to break through, or first vertical that is going to break through, is going to be some form of digital ID. And the second will most likely be on-chain payments that are privacy enhanced for those like Web2 companies. And then we'll probably see a few NFT based use cases. Yeah. Oh, sorry. There's one more interesting one, which is just loyalty points. So everyone was doing loyalty points a few months back, and it's a cool engagement tool. And then once you've built up this sort of user base, or offered your existing user base some cool solution based on loyalty points, it becomes easier to essentially upsell or offer them something more as well.
On the idea of digital IDs breaking through, what are your thoughts on projects like WorldCoin or Humanity Protocol, I think it's called, or Proof of Humanity, who are kind of trying to, Humanity Protocol is what it's called, like these biometric blockchain companies that are trying to kind of like prove who you are on chain and in society as a whole?
Yeah, I mean, we are overall very, very positive about the idea of having your verified on-chain ID, and this is also why we're heavily involved in one of those identity projects. And this is precisely an ideal, I would say, use case for zero knowledge and this sort of selective proving of, or selective disclosure of who you are and what's your background.
I know the company also launched Common recently, which is its private decentralized exchange. Can you tell us a little bit more about that?
Yeah. So this is something that we were looking to for a long time. And essentially one of the reasons why we decided to build a new protocol instead of building on the existing ones those few years ago. So Common in its final form, once it evolves, how we envision it is that it's your favorite go-to app for anything on chain that also allows you to interact with the external world. So essentially take what's best in DeFi, take what's best in fintechs, roll it all into one environment, one mobile app, and theoretically you should be able to do anything you want. From the sort of product breakdown standpoint, Common is a brand that encompasses 4 different products, really. The first one is your standard AMM, Uniswap V2 style. The second is a privacy enhanced order book exchange. And why this matters is that we're trying to recreate the convenience of a centralized exchange in a non-custodial environment. Then you have a wallet with a sort of seed abstraction, so that you as a beginner user, you don't have to worry about like storing your seed on a piece of paper, because that's of course safer than most of the solutions, but then again, it doesn't really help us to onboard more people, us as an industry. And then the fourth product is you want to use your crypto also for normal life interaction, let's call it. So you will have an integration with Apple Pay and like IBANs and conventional payment rails. And we're very fascinated about like building this non-custodial open source neo-banking stack, like let's call it. And this is where Common is going to definitely go in the future. At the moment, what launched is the AMM. Soon enough, it's going to be able to serve additional networks also beyond Aleph Zero, because we want this to be usable for other ecosystems. Yeah, that's pretty much the gist of it. So on the DeFi side, we want to, I would say, combine what's best in various aggregators like OneInch, and in various intent-based protocols like CowSwap, and then add privacy on top of it so that you don't really have to worry whether you're being tracked or not.
How common are private DEXs right now? Do they exist?
There are a few. Not too many of them, and none of them, because it's still pretty new. This entire movement. This hasn't broken into mainstream yet for several reasons, I would say. First one is UX, and this comes down to this sort of time of proof generation, or how much do you have to wait as a user for your assets to become private, and whether this waiting time is worth the benefit of having them shielded or not. So it's like a simple balance, I guess. With Common, we are hoping that this is going to become one of the first more broadly adopted protocols that utilizes privacy and enables both retail users as well as institutional ones to trade, really.
Yeah. You also mentioned before, quote unquote, normal interactions. What kind of normal interactions do you want users to do with Common, both on chain and then in the external world? Like, where do you see this going?
So like I've noticed, even when I'm using like different apps, right? And I guess I'm a sort of a power user, right? So I want my crypto to be as usable as possible. And then I have different options, like for instance, Nexo. I've got like Holy Held, which is quite cool as far as this intersection of normal world and crypto. And there's Gnosis Pay, which is super interesting also as a product. And then, like, how do we sort of make all of this even better than it is at the moment? So, I think it boils down to the broader usability of your crypto. And what I mean when we talk about sort of onboarding the masses or making it as usable for people from outside of the space, then it has to have the same features or better features than what they're currently using. So you want sort of that immediate conversions of your stables to via your Apple Pay enabled card when you make your purchases. You want this to be as non-custodial as possible. You want this to be also as much connected to like a tax calculation system as possible, so that it calculates your taxes for you. So it has to have relevant integrations. And like I honestly think that just using crypto on a daily basis is the future of onboarding the next wave of definitely retail users. And especially after like last bull runs, hiccups that we've seen with centralized actors, whoever I would say solves the convenience and UX of being able to offer the same sort of experience and functionality, but in a non-custodial way, is going to be a huge winner.
Yeah, definitely. I'm excited to see that kind of evolve and grow, and congrats on the launch.
Thank you.
Outside of A0 and everything we kind of discussed so far, what else are you watching right now that you think people should pay attention to?
In the broader space, you mean? Yeah, I mean, I am super interested in where the compliance is going. I've stopped watching the US market, admittedly. But in Europe, we do have MiCA, which is Markets and Crypto Assets Regulations. And this is really interesting from the perspective of how comprehensive it is as a first regulatory framework. It doesn't apply to NFTs, but it does apply to a lot of different use cases. And, there are two takes on this. So first one is that the sort of broader idea of regulating this space is going to make it difficult to do anything, and it's gonna sort of slow down the innovation. But at the same time, whenever we talk to banks or TradFi companies, they are not able to do anything without the proper regulatory framework.
Right.
So it's going to be very interesting to see what happens once MiCA is actually there, and how it impacts sort of the traditional companies. Beyond that, we've been looking into healthcare as sort of whether that would make sense to kind of seek use cases in, but for now I don't think so, because it's one of the slowest moving industries when it comes to data management. Yeah, I'm personally also quite interested in sort of the Solana versus Ethereum debate. This is really interesting to see. We're heavily looking into EVM based environments. In fact, we're working on one as well ourselves. Then decentralized sequencers for L2s. This is something that's going to be super interesting in the future as well.
Awesome. Cool. There's a lot to keep track of then. Antoni, my last major question for you is, can you leave us with a piece of advice, something that you've carried with you throughout your time in crypto?
Yeah, sure. I mean, do your own research is the basic one. But it never hurts to it never hurts to repeat that. If you're just starting, I would say that ideally prioritize non-custodial solutions over the comfort of the custodial ones, just for your own security, and only get involved with the custody providers if you're really trusting the company that runs it. And then, like, I would say that what carried us throughout the years is being focused on the underlying values of this space, rather than looking for the next 100, 200, 500x. And what drew me to this initially was this intersection of politics, sociology, finance, sort of the ability to have this immutable ledger, and what it will allow, or already allows to do. And this is one of the most beautiful concepts that I've ever came across, and sort of getting into the space with this mindset, it has been really helpful, and allowed us to do a lot of cool things, I guess.
Yeah, great. Well, thank you so much for coming on the show today, Antoni.
Thank you as well.